WESPN, Scott, straight to the goods here. First things first. That little client appreciation event there on Saturday. That was quite the success there. That was fun. It was we screened Moana 2 for some of our clients. Again, I felt the biggest drawback for me for that event was that I couldn't invite everybody. So we just kind of opened up the floodgates. Whoever registered first come, first serve, and 300 seats went pretty quick. And the movie was fantastic. We had Sparky's Toy Drive there. We had a balloon popcorn display, a giveaway, pictures with Maui, our very own Luis Mendez doubled as Maui that day, and overall a great event. And to take care of clients like that was pretty special. I mean, I was taken aback.
Yeah, like you said, we'd love to invite everybody, but you'd have to rent out probably five theaters for that. So not an option. But yeah, gave everybody the opportunity to come and filled up pretty quickly. But I think we should make an annual event out of that.
Yeah, it's easy to execute, and but if you're not getting our emails or our mail outs, again, just reach out and we'll throw you on there. For us, the more people we can serve, the better. The more people we can educate, the better. And the more people we can take care of with client events, the better. So I mean, just reach out. We'd be more than happy to serve you there.
Well, I know our last event, the outdoor ice skating event, didn't go as planned.
No, we pivoted from that, and it was a swimming event last December.
We had a little Indian summer in the middle of the winter that melted the ice.
Yeah.
So
Lansbury just absolutely melted. We still did it though. We had the music pumping, and wasn't the same though. Well, that's for sure. Now, what knowledge can we drop on people here today? We just got our November stats. December already. We're talking year end now. The stats are here. It's got a great snapshot of the year. The fact that it's December, we should probably see a market slowdown again. Market's very predictable, but November numbers have hit. They are in. And what'd you think of them when you first saw them?
Well, the headline number is stating that we're up about 10%, but that could be a little bit misleading, right? That's compared to November of last year versus November of this year. Very small sample size, 1 month. You can't really draw too many conclusions from that. But Paul here did a little bit more digging, and if we took the entire year of 2023 and compared it to 2024, it's actually only about a 3.5% to 4% increase, somewhere in there.
3.43. So when the headlines are always they're going to grab the most positive or the most negative number that they can. They grab the average sale price of $584,452 for the month of November, residential. Compared to last year, which was $529 and change. So that was an increase of 10.37 from this November to last November. Now, if we grab the year, we're in.
That's just November versus November.
It's just November versus November.
Right, so very small.
24 versus 23. Yeah. If we grab the year, we're at an average sale price of $577 off of this time last year to date of $558, which is a 3.43% increase.
Which sounds to me to be quite healthy, I would say, right? And relatively normal.
Yes.
And the first thing that comes to my mind is it kind of tracks with inflation. And I know that if I'm working with any investor clients and we're trying to project numbers out 10, 15, 20 years, the number that I use for appreciation is I'm going to use the rate of inflation, 2%, 2.5%, maybe 3%, depending on the market that you're working in and your projections. But tracking rate with inflation is what we'd like to see. It's healthy, it's balanced. And I think we saw that anecdotally in the market when we're working with buyers. This year was quite balanced.
Yeah.
A little bit of opportunity, a little bit of options out there. And we don't want a decreasing market. It's not healthy for Canada. It's not healthy for homeowners. It's not healthy for the economy. But we don't want 10, 15, 20% gains either. That's also pricing out a whole generation of buyers. So this is a nice, healthy return to
it's outpacing
normal.
It's outpacing inflation, which is great. And this year overall just felt balanced. It felt like we were just all kind of in a flow state, and there was opportunity out there. There was options for buyers, and great listings that are priced well had no problem selling. So I was very, very happy with the year. It did mirror last year, because I think last year Q4 was really, really rough, and Q1 this year was really, really rough. But the year ended very, very from let's call it March till late March till now, it's been very steady and in a nice little rise.
We have to remember last year we didn't have rate cuts. We had rate pauses throughout the end of 2024. So people are on edge. Nobody knows what's going to happen with rates. Are they coming down? Are they staying neutral? So we really did tail off in November, December, January of last year. It's happening again now, but not to the same extent, because we're actually getting not only do we get rate cuts, we have the projection of further rate cuts. We don't know exactly how it's going to play out, but I would anticipate at least a full % between now and the end of 2025, coupled with some more affordability fuel to the fire, right? Which we're going to talk about in a minute. But overall, very balanced market, healthy market, and sets up nicely for 2025, in my opinion.
Yeah, I think 2025 is going to be, another, it's going to be a little bit more of a rise than this year. I think we're going to see some great gains in the market. I think the buyers, the things that are put into place for the buyers to buy are all coming to fruition right now. And I think the affordability for the buyers is gonna return more, as opposed to a lot of this year where they just couldn't afford much, right?
Yeah, and we have to get a lot more single-family detached homes built, right? A lot of the product that's coming to market right now is condominiums, rental units, etc. Because a lot of these resale homes above $1 million, they're not selling because the affordability isn't there. And one of the big reasons for that is because you cannot get a CMHC insured mortgage on a property over $1 million.
Let's unpack this.
Yeah, it needs to be understood. It's going to have a significant impact, I think, on. It's good. I think it's a good thing because most builders, if you're going to buy a piece of land and build, you have to sell over $1 million. You don't have any profit margin, right? So the land's still expensive, etc. So you got to be priced over $1 million. But if you are a first-time entrant into the market, you go to the bank and you want to buy a $1.1 million home, you need to put 20% down. You can't get 5, 10, 15%. Yeah. You can't get CMHC insurance. And let's see, 20% of a $1.1 million is $210,000 or something like that.
Yep.
How long would it take the average worker in Canada to save $210,000, right? You don't own a home, you're not selling anything. We're talking like 5 to 10 years it could take. So this is why the new construction market has come to a complete halt for the most part. So what this new rule is bringing into place is the ability to get CMHC financing for any first-time home buyer on any property.
Up to
$1.5 million or any new construction home. So if you're now getting approved for a mortgage on a $1.5 million, let's use a bit of a more extreme example. Previously, you would need about $300,000.
So up to December 14th to purchase the minimum down payment on a $1.5 million home in Canada, $300,000.
$300,000. Again, how long would it take the average person to save $300,000 if you're not selling a home?
And the way that
you
this
probably
market
wouldn't be able to do it.
These are not final destination homes. This is we've got buyers that are over $1 million on their first home.
Absolutely.
Second home is very, very typical that your second home would be over $1 million, which is wild, right? But it is what it is.
Prices inflated massively. $1 million isn't that uncommon. It's a little bit less common in Windsor, but across Canada,
I think I cut you off there a little bit. I think you were explaining a little bit something different, where you were going first-time home buyers and new construction on the amortization, which is bumped up to 30 years, correct?
Yes.
Now, what we're talking about, the down payment on something over $1 million, this is for all buyers.
For all buyers,
This is for all buyers. If you're in the market today and you're buying something that's over $1 million, you're going to have to put down quite a significant amount of money. If we round it up to $1.5 million, you're going to have to put down $300,000. Things have come into place where starting December 15th, that $300,000 drops to $125,000. That's easier to digest.
We're talking 5 or 10 years of savings for most people. Probably that's the difference there.
We're also talking equity in if it's not their first home, which again typically it's not going to be, although it is for some people. If it's their second or third home, well, the equity is almost guaranteed to be built into their current
Very
place,
good point.
right?
Very
into
good
their
point.
current place.
It allows people to trade up a lot more easily.
Kind of like, ooh, I don't know if you're dipping into your savings. So I mean,
if you have any, right?
So imagine it's 125 now. You're taking that from the equity, which most people do. They'll take the equity from the place that they're selling and make a bigger down payment there anyways. You're not dipping into savings. See, these little things, that's going to start to stimulate the economy because now you've got more disposable income that you don't have to dip into. That's how I see that playing
Big
out.
time. And it's going to stimulate home building, which God knows we need. Now, let's unpack this a little bit further. It's not as clean as it might appear. It's 5% down up to the first 500,000 for CMHC financing, and then 10% from $500,001 to 1.5 million. So that's the actual breakdown. That's how we get to 125,000 instead of 300K, just so people understand exactly how this is playing out. But it's going to stoke demand. It's going to get builders building. I keep saying it, but right now all that we are building is rental apartments and rental units and infill duplexes and fourplexes. We need single-family detached homes.
Yep.
We need people to be able to afford to buy them. Yep. Now, touching on that 30-year amortization for first-time home buyers and buyers of new construction properties, any buyer of a new construction home can extend the amortization from 25 to 30 years. That was not an option before. Yep. Now it is. Did a little bit of math on that. And
what does that look like affordability-wise?
Yeah, so if we, on a $500,000 mortgage at 5% interest, the monthly payments would drop from $2,900 over 25 years to $2,625 over 30 years. Now, the big thing here is that is going to improve affordability and pre-approval amounts by about 10 to 12%. So 10% buying power on $1.5 million, right? Now you're only approved for, let's say, 900,000 or 1 million. Now you're approved for 1.05 or 1.1 million. And it's just allowing people to get into the market because that's where these new construction homes in Windsor, particularly, that's where they're selling at. Your starting point's kind of 1.112 most of the time. So,
like I said, buyers getting back into the market, and this is what I feel is going to happen very early in Q1 is that the once the holidays are done, all that stuff, that the buyers are going to be, there's going to be quite a few more buyers into the market. My listings, I'm recommending that that you do wait till that January, mid-January, late January mark if you can, because again, there's going to be more buyers in the market. Yes, I get it. You can list now and there's less inventory. Inventory on residential real estate between LaSalle, Tecumseh, and everything in between is down about 30 units since we last shot 2 weeks ago. So it's not coming down as fast as we thought it would. It is coming down, but there's still a lot of inventory out there. So why would you throw yourself into what I feel still a high inventory market when the buyers are all busy?
It's high inventory and it's muted pricing. Yeah. People that are shopping right now are just browsing. In general, I find they're browsing. They don't have any sort of the proverbial gun to their head to pull the trigger on anything. They're anticipating further rate cuts. Why would I lock into a mortgage now when we're going to get further cuts in the new year? Yeah. Even one coming up this month, I think December 11th, we're projecting a 1/4 to 0.5% cut. People are just poking around right now. And we know that most markets operate on FOMO. Nobody wants something until everybody else wants it. We think in the new year, February, March, April, specifically, you're going to have the buyers returning. You're going to have another rate cut or two in between then, coupled with all these things that we're talking about now. And why list now if you don't have to, when you can list in the historically strongest market at the time, which is our spring market. You always say it.
Yeah, this is not.
And I couldn't agree more.
Yeah, this is not a guessing game. I mean, if I laid the graphs month over month, there's just more action. And this, again, the market's very predictable. But if I was a buyer and I was out there right now, I would be extremely active. I would be super, super active and try and lock something up before the new year, if you can. Not the end of the world if you don't. I don't think it's going to jump by 20% or anything like that. But I think there's opportunity out there right now on that end. I want to go back to the stats here for a second, just because we're in November and I love these year-to-date numbers. You know, my favorite number is always that average sale price for the month, which again is at $584. But these year-to-date numbers, because we're so deep, are very interesting. So everything is up across the board. But listings are also, the thing that's up the most are the listings. So we have 11,139 listings year to date, up 11.29% this year over last year to date. We're not talking about month. Sales, 4,806, up 2.91%. So sales up 2.91, average sale price up 3.43. Listings up 11.29. So again, what we're saying, and when we feel that it's a higher inventory market, well, the numbers are right there.
That's some great data right there.
Thanks, Scott.
Yeah,
I appreciate that, man.
Like you said, everything's up, but the listings are up significantly more. We're talking 7, 8, 9% more than the sales, which means we are building inventory, and we feel that out there right now. This is the time when that happens every year. It's happened the past 3. It's happening right now. The bonus here that we have this time heading into 2025 is it's going to be coupled with rate cuts. We weren't getting that at the start of 2024. It was the opposite. It was just pauses. Now we're going to get rate cuts coupled with 30-year AMs and CMHC for up to 1.5 million. You can see this fuel is coming, and probably more rate cuts.
Yeah, I would assume so. And again, so what does that all mean? All those year-to-date numbers? It means that things are still selling, and the things that are selling for a good price, a fair price, but you got to be special on that list side.
That's a great way of putting it. If you're an average home in an average location and you're priced at March, April, May, June prices, you might sit for a while. I'm experiencing it on a couple properties. The only buyers that are going to take that on are looking for a December discount right now. In my opinion, if you're special, you might get today's market pricing. But I'm not seeing 5, 6, 7 offers and over market value right now.
I'm so
pretty tough to generate that.
Yeah, I'm so patient with the listings right now, and I'm not. There's no panic button to hit. No, nobody's in a jam. It's just solid information saying relax, be patient. Be patient. What looks like this month may not look like it next month. So just be patient. We're right there. Enjoy the holidays, man. Like relax. I may pull the listing. I may cancel it. I may just ride it all throughout. And then those things that are, as the buyers come back and the inventory starts to come down, that's our time to shine.
Great point. 2025 is looking very strong. I thought we could pivot here as well. And just I know in the average person that's not from Windsor, when they think of Windsor, all they think about is Ford, GM, Chrysler. Maybe they know about the Gordie Howe Bridge that's coming, the battery plant. But they don't really know about all the other businesses that are here. So I thought we could highlight just maybe one business every week that people don't know about.
I love it.
And there's Next Innovation, that's NEXE. They make disposable coffee pods for coffee brands all across Canada and the U.S.
Oh, nice.
They recently located to Windsor from BC. It was BC or Alberta. Bought a manufacturing facility here in Forest Glade. Started manufacturing here. They've got 20 employees now. They're looking to add a second shift. And when you listen to their press releases, they're saying hey, Windsor's got the manufacturing history. They've got the manufacturing real estate, the zoning, and the employee base to come here at probably a 50% discount to these other cities and provinces because they're just more expensive. So
I see it. You see it driving around too, right? I mean, took Sienna to soccer on the weekend at Central Park Athletics. Go Bell River, and I look over, the Amazon thing's already up. I'm like,
off of the expressway there.
That thing popped up like so quick, and I was like, this is amazing, right? So it's just more jobs, more great fundamentals here. We don't need to talk about the battery plant. I mean, the thing is
we beat that to death.
The thing is massive. Yeah. They're getting going in there right now. I'm talking to people working there, and they're
substantial completion summer of this year. So the building will be up, and then it's going to be a slow, steady hiring process. But it's not just those, right? We have a lot of other things going on here.
Yeah, I think it's a great idea to focus on one a week and just say, oh my God, that stuff's made here. That's amazing. Mm-hmm. So we won't dive into any others. And again, a stats heavy episode this week, which is what we love talking about. If you enjoy this episode, of course, share it, like it. And if you're not in the database, getting our mailouts or our emails
and our invites,
being a client here is we just love taking care of them. So just reach out and we'd be more than happy to add you to those. Scott, as always, the knowledge. I like this sit-down setup a little bit better. I like it's like we are talking to each other. It just feels natural. It feels good. Can't wait for the next episode.